Have you ever wondered why some people seem to build wealth through real estate while others buy property and struggle? The answer isn't always the property itself. In fact, after spending more than 5 years helping people finance homes and investment properties, I've learned that the difference often comes down to strategy. Most people spend months looking for the perfect property. They drive around neighborhoods, search Zillow every night and compare prices, but very few people spend enough time understanding the financing aspect of things, the cash flow, and the long term plan behind the purchase. And that's exactly why we wrote Financing Real Estate Wealth. Today, I want to share a few of the biggest lessons I've learned personally after helping countless home buyers, investors, self-employed borrowers, and families navigate the mortgage process with ease. The first lesson is simple. Real estate is not a get-rich-quick strategy. Social media makes it look so easy these days. You'll see people talking about buying properties with no money, retiring in a few years, or making hundreds of thousands of dollars overnight. The reality is that most successful investors build wealth slowly. They buy good properties, they make smart decisions, and they protect their cash flow. And they stay consistent over time. That's what creates wealth. One of the biggest mistakes I see people make is buying a property based on an emotional connection instead of actual numbers. They fall in love with the property and they get overly excited. They start imagining what it could become, but they never stop and ask the most important question to themselves. Does this property actually make financial sense? If you're buying an investment property, you need to understand the numbers. How much rent will it generate? What are the taxes? What is the insurance? Will there be any HOA fees? How much should you set aside for maintenance? And what happens if the property sits vacant for a month or two? These are the questions successful investors ask before they buy, because the goal isn't simply to own a property. The goal is to own a property that helps improve your financial future. Another concept I talk about extensively in our book is cash flow. Cash flow is one of the most important factors in real estate investing. Simply put, cash flow is the money left over after all expenses are paid. The rent comes in, the mortgage gets paid, taxes get paid, insurance gets paid, maintenance gets paid, and hopefully there's still money left over. Positive cash flow gives investors flexibility. It gives them breathing room. It helps them survive market changes. It helps them handle repairs, and it allows them to continue growing their portfolio over time. Now let's talk about something that makes real estate unique compared to many other investments. Leverage. Leverage is one of the most powerful tools available for building wealth. Think about it. If you buy a $400,000 property, you don't necessarily need $400,000 in cash. You might be able to purchase that property with a down payment and financing. That means you're controlling a much larger asset with a smaller amount of your own money. If the property appreciates over time, that appreciation is based on the full property value, not just the money you invested. That's why leverage can be so powerful. But here's the important part. Leverage only works when it's used responsibly. I've seen investors get in trouble because they stretched themselves too thin. They bought too much property. They used every dollar they had to close, and they had nothing left when life happened. That's why we constantly talk about reserves in the book. Reserves are the money you still have after closing. They're your safety net. And trust me, every investor needs to have a safety net. Tenants move out, air conditioners stop working, roofs leak, and unexpected things happen. The investor who succeeds long term aren't the ones who never face problems. They're the ones who are financially prepared when problems occur. Another topic we discuss in the book is understanding the right loan program. Many people assume that if one lender says no, that's the end of the story, but that's often not true. There are many different loan programs and lenders available today: conventional loans, government loans, DSCR loans, bank statement loans, non QM loans, and programs designed specifically for self employed borrowers, programs designed specifically for investors, and programs designed for people whose tax returns don't tell the full story. I've personally seen borrowers get turned down somewhere else and become homeowners just weeks later working with me because we found a financing solution that actually matched their unique situation. That's why I always tell people this: don't focus on finding a loan, focus on finding the right loan for you. There's a huge difference. And finally, I want to leave you with the biggest lesson you'll take away from the book. Real estate wealth is built through patience, it's built through discipline, and it's built through smart financing. It's built through protecting your cash flow, and it's built through making decisions based on numbers instead of emotions. And most importantly, it's built through thinking long term. The people who build the most wealth through real estate aren't usually the people chasing shortcuts. They're the people making smart decisions year after year after year. If you're interested in a DSCR loan, or if you're self-employed, or if you're just a regular, consumer looking for an FHA or conventional loan, I'd be more than happy to help you. And you could reach out to me directly at 813-568-2291, or you could call my partner and dad, Jem, at 813-919-9925. And also, if you want to pick up your digital copy of our book, feel free to grab it at www.mortgageskyhill.com. It's www.mortgageskyhill.com. At the top, there's a My Book section. You'll click that and you can read through our digital copy. Anyways, we'd love to help you with your mortgage needs, and I hope that you have a great day.